David, you want to go first?
So maybe you should go first.
Sure. I'm Scott. I'm the president of CoinList. CoinList has been a token sale launch platform since 2017. We've done about 1.2 billion in financing for predominantly tokens. More recently, we've also been participating in a bunch of DATs, both helping construct them with various teams, as well as investing. And if you would like to participate in DATs and you don't have $1 million, come talk to me afterwards. We can help you get into some vehicles.
All right. Hey, guys. I'm David here. I run an early-stage venture firm called Inception Capital. We also have a fund of fund arm on top of that. So we're invested across, early-stage venture and also a bunch of emerging managers in the space. Been in the space for almost 10 years now, was previously running global strategy investments at Obi before starting Inception 4 years ago. And we're based out of New York, but invest globally and have 40 portfolios up to date.
Wonderful. Well, since it's a panel on DATs, I have a DAT, and happy to dive in and just share a bit about the journey and what it took to pull that together. I've been in the space for a long time with the creation of Tether many, many years ago, and a number of other companies. As you see up here, it's Stable, WeFi, and Reserve One. Stable is the next generation stablecoin, what I like to call Stablecoin 2.0. So this is STBL.com, and we recently launched a token. WeFi is a decentralized on-chain bank. So that's the next generation of banking. And then Reserve One, we recently closed $1 billion to launch a company on the NASDAQ. The SEC will approve the business combination, hopefully November, December. We'll start trading under R1, R-O-N-E. So yeah, looking forward to diving in.
Since you so kindly said, you're willing to talk about the journey, maybe tell us a little bit why you got involved in DATs and, why you wanted to form one. A little bit background on how you got here.
Absolutely. Well, for me, my passion is to deliver on the promise of blockchain, deliver on the promise of Web3. And so the promise of blockchain is the democratization of financial access and different currencies on top of that financial access. The promise of Web3 is that the community who puts the value in gets the value out. And where the DAT falls into place is for the last 10 plus years, really promoting Bitcoin and stable coins and just the industry in general. There is this amazing community, this global community, but it's not, we feel it's everybody, but we've just scratched the surface. And so now DATs enable the rest of the world, people who aren't comfortable utilizing crypto wallets and diving into that industry, it gives them access, especially the institutions. They do want to participate. They're not able to. And so the DAT's a new way to do that. And in addition, since it's not just an ETF and it's not just a single asset DAT, it gives people broader exposure to crypto and it gives them highly managed exposure. So people that are professionals in overseeing how you manage, how you generate yield, and what you do with that crypto. So that's what ultimately should lead to a premium in that stock trading versus an individual holding it on their own.
Awesome. David, you are coming from the other side. You're not building in this case, but you're investing. How do you think about the value of DATs and on the investor side, especially coming from a token investor originally, and now we're playing in public markets?
Yeah, I mean, I think for us, we're investors in a lot of really great projects globally, and we have over 10 projects on Binance, Upbit and Bithumb, and all of these projects do incredibly well within sort of the altcoin markets. But whenever my friends or like other investors want to really get involved in some of these, I guess, lower cap projects, I can tell them, hey, these are the things in our portfolio. They can go ahead and buy it, but first they don't know at what size to buy it at what time, and it won't be able to also accumulate over time, nor do they know when to ultimately liquidate and ultimately take profit on these. So as sort of some of our portfolios, like Aether just launched a pretty big DAT earlier this week, with a bunch of others coming on the token markets that were earliest invested in Mega ETH. Don't want to say if they're going to do it that in the future, but others like Theoret that was 42 oversubscribed on Kaido, and also Talus, one of the hottest upcoming AI agent projects coming up. So all of these portfolios, they can launch on the global exchanges, but that's just a tiny fraction of the global demand for cryptocurrencies global wide. And I think through GCAT is really how, a lot of sort of our portfolios are able to capture a lot of the traditional markets and being able to attract the everyday sort of equities trader or anyone that really wants to participate in a crypto, but, wants sort of additional upside beyond just, the Bitcoin, Solana, and Ethereum support.
Awesome. Reeve, I would love to, I think one of the really interesting things about DATs, and as it applies for, crypto projects, founders, builders, investors, which you already highlighted, you're talking to a different audience than you normally do. Foundations or the labcos are often talking to developers, or they're talking to consumers of crypto, maybe here or elsewhere. The DATs are kind of speaking to a different audience. I'd be curious, from the operator side, what are the types of conversations that you're having with the new investors or these people that are coming through? How are they? I'm just curious, like what kind of questions they're asking, how they're learning about it. What does that look like?
Yeah, it was super fascinating, especially for me, because I've been an entrepreneur my entire career and I've raised lots of money for various companies. But the majority of the people that I've interacted with in the past are angel investors or VC firms. And it's a very different type of education. So, for instance, when we announced that we were doing this, we acquired a SPAC, and I'm the CEO of the SPAC company. And then we had the target Reserve One, and Reserve One is a bespoke company created just to hold the diversified treasury. But we announced this whole thing, and they're like, yes, we're going to raise $1 billion in a month. And just though that statement alone blew my mind, because I've raised so many times and it's just this arduous process. I mean, it couldn't be more different when you're dealing with institutions on Wall Street. So that was a fascinating learning experience. And yes, the questions are much different. You get on all these calls and there's these extremely smart bankers that ask very pointed questions. And so there's no fluff. They really dive into the math and it really has to make sense. Why are you going to trade above MNAV? Why does this make sense? How are you going to appeal to retail? How are you going to appeal to other institutions? How are you going to maintain the brand? How are you going to ensure that you're managing everything appropriately? And in learning that process, there was this big craze of DATs. Everyone heard about it. And so a lot of people from the crypto space tried to dive in because there's a lot of bankers, a lot of lawyers that say, yes, come, let's raise money. And because they get a lot of fees. And so you hear this frenzy of people, but a lot of those deals aren't going to make it out because it's much, much, much more complex than one would think. I was very fortunate to have a partner, Chin Chu, with a company called CC Capital. He's a self-made multi-billionaire from being on Wall Street for 20 plus years and being at BlackRock forever. And he knows the in and outs. And so that's my kind of recommendation to people that want to dive into this space. You really do need a robust institutional partner that knows how to navigate all the rules and regulations and deal with all the BS and then all of the lawyers and just how to make that go. Because if you make a foot fault in this space, the penalties are very high. You really can get in trouble. Whereas in the crypto space, there's a lot, it's the Wild West. And so it's a different world. But yes, it was an amazing learning experience. And I'm very thankful for it. The thing I'm most thankful for is the fact that we can actually do that, right? Like even 1 year ago, it was unthought. Like Michael Saylor really paved the way, but he just kind of navigated his way into it. But for the floodgates to open, the regulatory landscape had to significantly shift. And so thanks to the U.S., the new administration, that has taken place. And so now the world is open for these types of companies and the innovation that is going to take place, because now you can take crypto companies and public companies and merge them, is going to be amazing. Because the days of single asset DATs where people are just sitting on crypto and hoping it goes up in a public vehicle is over. That window actually closed quite quickly. And in order to compete and to go public and to be successful in the future for a DAT, you're going to have to be super creative and add a lot of value. So I don't know what those models are going to look like, but we can keep an eye out for really innovative companies bridging the gap between the public markets and the crypto markets. And so I do think there are still a lot of exciting DATs to come.
Yeah, I would agree with that. I think right now, I would say we're in kind of DAT 2.5, maybe leaning into that 3.0, something like that, where, I mean, obviously, I think panels have been talking about DATs this whole time, so we're not explaining what they are. I assume that you already know what they are. But, Michael Saylor's, DAT 1.0 is, buying Bitcoin, basically doing nothing else. I mean, it's a very good strategy. It's been very effective. DAT 2.0 is maybe, we'll add in staking, whether it's on ETH or some other type of kind of passive yield mechanism. And now DAT 2.5 or DAT 3.0 is, I don't think there's a lot more opportunity for innovative things that these companies can be doing in this ecosystem. I think I hear a lot of criticism about DATs broadly for people that don't understand them. But I think as a crypto person or, works with founders or works with builders, there's always been a limitation on what, as I said, what the foundations can do and what the labs companies can do as it relates to the, broader ecosystem. But now you have this entity that holds a significant amount of assets, your crypto asset. They're aligned with you to make, to want that to be successful. And they have a lot more flexibility as a corporate entity and also in how much where they can raise money from, what they can deploy it to. That is not really suitable for a foundation or maybe even the labs company that's developing this. And so I think we're going to see a lot more interesting and innovative things coming out of the corporate kind of side that just wasn't really feasible. And also, if you're trying to raise a DAT right now, being the 15th Bitcoin, I'm going to do nothing DAT is not super effective. I mean, you should probably just own MicroStrategy or Strategy now. Sure.
Question. So are there any analogies to these DATs that exist right now for traditional markets? And if not, why is still making a NVIDIA DAT right now?
I can't remember. There is one. I mean, they're kind of similar to investment trusts, but they're not structured as closed-end funds, right? So you do have these things. Most of those are not single assets. I did see something in the news where someone was buying a bunch of, I don't know, maybe it was GameStop or something, they're trying to, I don't know, DAT squared or something like that.
Maybe I can take this. So I actually want to sort of compare the DAT space with like how like venture funds work, right? Like when you think about when Pantera first launched, all they did was buy Bitcoin. Obviously, that created really good returns. But if they continue with that strategy, no one's going to invest in the fund. So I think anytime that any type of vehicle that becomes public and you tell them exactly what your strategy is not going to be that interesting because people always think no matter what, they're going to be able to replicate it, right? So like why all of the best, highest performing funds right now are kind of almost like blindfold, right? You don't exactly know what they're going to do, but they have really good track record. They kind of have a typical thesis that they want to go after, but they are going to go out and find the alpha in the market, right? So I think if I told you I'm going to raise a new fund and all I'm going to invest in is XYZ, everyone's going to just say that, hey, I can do that as well, right? So I think anytime a new type of vehicle launches in the future, whether it's to buy NVIDIA or whether it's to buy anything, you have to have some like secret sauce or you have to have some type of competitive advantage, not only on the buy side, but also on like how you are able to exit, how you're able to manage your positions, and how you manage sort of the potential bear market that is bound to come in the future. And how do you structure the management team so that you're not really just fully risk on without any sort of hedging process and being able to sort of fully protect yourself against any sort of downturns in the future, right? So that's how I think about DAT as a space. It's a de facto type of fund that are effectively selling to the market in outlets.
Maybe I'll piggyback on your answer there. What are the things that you are as an investor looking for in either new DATs that are coming to market or even some that are on the market right now? How do you differentiate between two different Solana vehicles or whatever? What are the characteristics that you're looking for that you think are exciting on the DAT side?
Yeah, I mean, I think for us, we're not necessarily like DAT investors, but we have a suite of different portfolios within all the companies that we invested, and not everyone makes sense to launch a DAT. It's just like not every company makes sense to launch a token. It's the same, right? So I think a lot of what makes sense to have a DAT is like things that are actually able to generate tangible revenue and things that are actually make sense for general public, right? You can't really have a token that already has a token accrual on the token side, but you really want to replicate it on the equity side. Like you can't have the best of both worlds on that side, right? So you should have something that people are able to get through exposure on the equity side that actually makes it interesting. And that's why Aether, that was super interesting. And, it has done well in the market because it has, 150 million ARR, and it's actually using this as a way to source compute and continue to generate sort of a runway so that they're able to run their business even better than what they're able to do now, right? So I think a lot of that has to be synergetic with your existing business and not just launch something that doesn't really do much to your bottom line and it's just a cash grab.
I just have a question. Maybe I need more of a definition. I like your 1.0, 2.0, 3.0. MicroStrategy sounds kind of like Bitcoin ETF layer. And then any company, like I'm a company and I'm generating on-chain revenues. I have a treasury of digital assets now, right? So everybody so from that shape, if they're generating on-chain revenue, did that kind of?
I think definitionally, I would describe it as like there are companies that own Bitcoin on their balance sheet. Like Figma owns Bitcoin on their balance sheet. That's one category of things. I don't think most people think of those companies as DATs. Then there are, another category of companies that their main purpose is to accumulate and acquire that, said asset. Could be anything. MicroStrategy is probably the best example of this, and most people think of them as, digital asset treasury company. And then I think this like 3.0 version is a little bit more, often looks a little more like this, Aether, situation. There's other ones that are similar to this, where they are generating, they have a real revenue business as well as they have a token as it relates to that. And those kind of get combined and brought into, the public markets. Whether those are going to continue to be called DATs exactly, and it may change.
You expand the power of the token and the treasuries getting connected and playing into this picture. Like that's got to be a big. Maybe you should come and did the moderate.
Sure. Yeah, come sit up. No. So I'm not as, maybe you just want to explain the Aether one. Maybe that's a good example. I didn't look at that deal, so I'm less familiar. I can tell you about a different one, but Aether is probably.
Yeah. Well, what is the exact question again?
I guess you're just mentioning that the token is someone tied to the DAF for the example you look at, and that makes a lot of sense to me. If my token is somehow tied to a DAF, the token value could be as the DAF AUM increase, right? So I try to understand, what's that linkage looking like?
Yeah, so the structure, I guess, like this, the standard DApp structure is, you raise a bunch of capital. Some of it may come in kind, the rest will come in cash. The company gets formed either through a SPAC or reverse takeover. That company then uses the cash to purchase the underlying digital asset. From there, they're still an operating company. They need to generate, potential revenue, they have costs, they do other things. In some case, like in a very basic, DAT, the only strategy is to accumulate more of that asset and do it as efficiently as possible. The classic, DAT trade is I have an operating company. I own a bunch of Bitcoin. I'm trading at 1.2 times the value of the Bitcoin. I can then go sell stock to acquire Bitcoin. And effectively, it's cheaper, to do that. That's the Michael Saylor strategy. Hopefully, as you're accumulating these assets, the prices are going up and everyone is happy. There are other types of financing mechanisms that you can engage in, but that's the kind of treasury kind of strategy, the basic one. There are others. I mean, I don't know how much you can actually talk about what you're doing or your plan is.
I could talk all about it.
Yeah.
Tell us. We filed our S4 and so we're very close to, once the SEC completes its evaluation and finally approves it, ideally by the end of this year, then the new ticker will be trading and we'll be able to deploy $1 billion into crypto. Our strategy is a diversified strategy. So it's 80% Bitcoin, 20% altcoins, mainly ETH and Solana. And then in addition, we'll take that treasury and apply it for yield. So doing very novel yield strategies that are regulated and extremely safe, but ideally over time will increase the amount of yield we get. And so that'll start generating some significant revenue. Because also what's taking place in the industry, both the crypto ecosystem, is that there are going to be more and more ways to earn safe yield on Bitcoin at higher and higher rates. And so that's going to be very beneficial and accretive to these DATs, to these public companies that rely on that yield. So that's one portion. And then in addition to actively managing that, it would be for us, we have a sleeve that's dedicated for VC investments, where we will actively take bets in the industry, very high conviction bets. Because unlike traditional VC companies that have a bunch of cash sitting on the side and their job and they're incentivized to pull down that cash and put it into investments, we're the dead opposite. Our cash is sitting in crypto, mainly in Bitcoin. And if we're going to pull down on that at all to invest in another company, we better be really, really sure, as sure as one can be, that it's going to be a good investment. It's got to outperform Bitcoin versus just outperform cash sitting on a balance sheet. So the investments we make have to be both accretive to the ecosystem, but also our ecosystem, ideally in ways to earn that safe yield on your Bitcoin and other companies that really will increase the overall ecosystem. And that type of diversification and those different, pillars of what our business model is, and that professional management is why holding a DAT or holding Reserve One could be more beneficial than you trying to do all those things on your own, especially when it's as easy as calling your stockbroker and saying, buy this equity. So that's the purpose of these digital asset treasury companies, especially when he's mentioning 2.0 and 3.0. It's really to have a very professional group managing your crypto exposure.
Did I answer the question? Awesome. Let's see what else can we talk about in that world?
Maybe you can share some of the things you guys are doing.
Oh yeah, sure. I'm happy to speak a little bit. So as I mentioned, CoinList got started because we help launch and do token sales and ICOs for a lot of projects in the space. We've done 1.2 billion in financing and more than 1 million people have participated and purchased tokens. Our first one was Filecoin. We've found Solana, Near, Ondo, tons of amazing projects. As the DATs kind of evolve and come around, we've been working, kind of with foundations in how to construct these, because they're often ones, nowadays a lot of like Bitcoin has no foundation, but a lot of the, altcoins, they do, and they're trying to steward, good, responsible actors to be, in these DATs. They see the value as for these to be in the public markets. And then as well, we're also, participating and investing in these and making them, somewhat available to a broader public, audience. Typically, if you invest in like the early, the PIPE or the private company before the SPAC, the minimum ticket size is maybe $1 million, $2 million, something like that. So we have fund vehicles that people can come in and participate and write a check like $50K. It's not, it's still restricted to, accredited investors and qualified purchasers, but you could still participate in these. So we've been, providing, access to various vehicles, to, but these types of investors. And I think participating at that stage is interesting at the formation, especially, a couple months ago, as these things, the MNAVs are trading up really high. Typically at that stage, when the PIPE is formed, it's maybe around 1 or maybe a little bit less than 1. So you get some MNAV appreciation right away. But that's what we've been doing. I'm personally a big supporter of the DATs I work with founders almost all the time. That's my main thing that I do. And I think it's a net benefit to their ecosystems. It's a net benefit to crypto more broadly. It speaks to, a new set of audience. You can, if you're a Solana DAT and you invest, you generate yield on Solana, that's great. It helps secure the network. In addition to that, you're also maybe investing in VC deals in that specific ecosystem and supporting them and, putting capital work in DeFi protocols on Solana. I think all of those things are great if you care about Solana. And so I think they're pretty good for the broader ecosystem. So we've been trying to help teams put them together. They're not appropriate for everyone, but they're, I think a very cool new development in the crypto space. What I guess you spoke to this a little bit, how are you working with your portfolio companies? How are they thinking about the DAT space and what they should be doing?
Yeah, I mean, I think it definitely takes a lot of work and a lot of deep understanding in this space to be able to pull it well. There definitely hasn't been there's definitely been more unsuccessful ones than successful ones. So I do really caution sort of the founders to make sure they're on the right path. Just like there's many more failed token launches than there are successful token launches, right? So I try to think about it the same way. But definitely, if pulled out well, right, and executed properly, is a massive net benefit for the portfolio founder. And so, like, we always want to sort of steer them in the way of caution, but at the same time, do want to sort of assess, right? There should be a pretty long assessment period of like, hey, does this make sense? But does this also make sense at this point in time? And like, what is sort of the minimum viable amount of capital that you need to raise for this to be sustainable over time? And can we really put together the proper management team? So I don't want anyone rushing into it. Like even for Aether's team, like they spend 5 months just looking for the shell and be able to really do proper diligence on it before ultimately launching this force, right? They talk to all of their investors. They were very transparent in sort of how they're handling the business. It's also a really good way for them to have actually a listed company tied to them, right? And that helps their underlying business. Like, you know, a lot of actually their suppliers and people that they source compute for are like very traditional companies. Like they don't really want to work with a crypto company for a lot of times. But now that you have a list go behind you, like it actually makes their operating business a lot easier for them to land partnerships, a lot easier to work with, all of their partners within your ecosystem. So it's like not only net beneficial from the capital that they raise, but also from like a branding and the ecosystem building perspective, right? So there's like many, many factors that you have to think about beyond just sort of raising capital and making sort of the capital put to work and getting your token price up. I think there's a lot more to do than that. And I think from sort of DHT 3.0 and beyond, like we all have to think about the synergies of that, right? And we have a lot more potential DATs coming, but I think a lot of this is very exclusive. We can't really talk too much about it because I'm on NDAs with pretty much all of them. But definitely, this is here to stay, and I think this is something that is a really good bridge between sort of the traditional capital markets and what's happening in crypto. So,
I was going to ask you a question here, so go ahead.
Yeah, well, he's spot on. This is a really good bridge between the traditional markets and the crypto markets. And the reason why it's so important, especially when you look towards the future, this is extraordinary marketing for the underlying protocols if they get their own DAT. And in addition, it's going to bring more visibility into those companies and ultimately more regulation, because a public company isn't going to hold an underlying asset that's poorly managed. It's right now, there's no one really overseeing it. And even regulations aren't there to really increase the profit of the underlying asset of that protocol. However, if that protocol now knows, okay, if I follow regulations well enough, even though I'm not specifically regulated, but if I follow them well enough for a public company to hold my token, it will increase my profit. So it switches the incentives a little bit for companies to actually be more above board and more professionally run in the crypto space if they want to be held in a treasury from a public company. In addition, think about DeFi. DeFi also is the wild, wild west on how you earn yield on different tokens. But if you want a public company to utilize your DeFi function or platform or solution to generate yield on ideally the tens or hundreds of billions of dollars that these public companies are going to be holding, then that DeFi solution has to hold itself to a certain standard where a regulated company can play in that world. So over time, like that's here to stay. And it's an amazing step in higher quality management throughout the crypto ecosystem, even without direct regulation.
Awesome. I'm just looking cognizant of the time. We're kind of deregulated over here. No, there's no clock. I don't know how long we're supposed to be up. But if you have any questions, go to some questions.
decentralizing the moderator.
Yeah. I have a question for Reed Collins. So you just mentioned that you're managing the Bitcoin reserves, basically to generate yield for the Bitcoin rack. So I'd like to hear your advice. What's your view on the best way to generate yield on Bitcoin? There are staking, there are like for and then arbitraging, and also like the second question is what is the current strategy for Reserve One to like generate yield for Bitcoin? Thank you.
Yeah. Those are great questions. And it's to use regulated asset managers, first of all. So people, because since we are a regulated company, we have to be very particular in the ways that we generate that yield. And that's kind of what I was getting at before. Right now, there's lots of ways to generate yield on Bitcoin and the other assets, but are they done in a clearly transparent manner that's safe enough for a public company to participate in those pools? So it really has reduced the amount of avenues that a public company has to generate that yield. And I know that you personally have a company that does generate yield, like even through when the assets are custodied at Coinbase on Bitcoin, which is the right solution in the beginning, right? The assets are going to be the assets will have to be custodied at a regulated place in order for us to participate. And so those are the solutions that we'll be looking towards. And so when you say what's the right exact mix and where are we going to lean towards? Well, the one that's the most regulated that generates the most yield. And we have an excellent head of investment, Sebastian Diaz, who used to be at Coinbase, and he was the president of Coinbase Asset Management. So he's overseeing our strategies and ensuring that we're finding the safest, cleanest, highest yielding ways to generate that yield on Bitcoin, but not only Bitcoin, but Ethereum and Solana and the other assets. So it's a great question. And there's going to be better and better solutions over time, and hopefully yours is one of them.
Are there any other questions? Okay. Well, no other questions. I just want to say thank you to our panelists, David and Reeve. I really appreciate it. Bringing some cool knowledge to us.
Thank you.